Greetings and welcome. Thank you for joining the third webinar in our Renewable Revolution series, The Revolution at Work. For those of you that have joined us and those that haven't, but will be doing so, it's been an exciting journey to see how renewables are really transforming the way organizations are thinking about energy. And I know that today absolutely will not disappoint. I'm John Hoekstra, today's MC for our session, where I'm truly pleased to be joined by a dynamic panel of special guests from really leading companies in the area of renewable energy and quite frankly beyond that. I know that this group is really excited to share with you some of the triumphs, but also some of the tribulations of how to really integrate renewable energy and how they've done so and successfully at their respective companies. What I think you'll also find interesting a bit is the diversity of this group and really the different perspectives that each of them have on renewables given their respective functions. Chris Wellis with HP is really passionate about, I know in speaking with Chris, is really passionate about drawing upon his experience in business and engineering to really find ways to bring businesses closer to economic, social, and environmental sustainability. As Director of Strategic Initiatives within the Corporate Affairs at HP, he's responsible for identifying, creating, and managing global programs that kind of contribute to society through measurable impact. Prior to his current position and role, he was also responsible for advancing the HP environmental brand, which included a lot of the history, if you will, around some of the renewable energy efforts with HP. So kind of from that sustainability functional perspective. Amy Vaya also joins us from Owens Corning, where she's their global energy sourcing lead, based out of Granville, Ohio. Really, Amy is, in working with her, has a pretty dynamic role as well in managing really all sourcing activities globally for electricity and natural gas, covering a pretty significant multi-million-dollar, $400 million annual spend on behalf of the company. So in addition to that, she also leads project exploration, sourcing, and contract negotiation for renewable and alternative energy projects for the company. So really having that focus around energy procurement and finances, as we've talked about in previous webinars, a multitude of different functional perspectives to bring to the table. And last but not least is Mark Gasper with IKEA. Mark is U.S. Engineering Manager and is responsible for managing the engineering and architectural standards for design and construction of IKEA, those iconic IKEA stores that you see. So prior to his current role, he was also responsible for developing and managing the corporate energy program. Notably, and he'll expand on some of this, includes the installation of solar PV systems across 90% of IKEA's U.S. buildings. So a pretty interesting perspective from a strong facilities, real estate, and construction perspective to bring to the table. So thank you again to our esteemed panel and really looking forward to this discussion. And for purposes of you in the audience, you'll have plenty of opportunity to interject your questions to really help focus this as a dialogue as in an interactive webinar session for us to really share with you some of the insights from this great group. So as this is the third webinar in our series, I wanted to take just a brief moment to recap what we've covered so far and provide a bit of a foundation for today's discussion. And as a reminder, and you may have seen, everyone attending will be able to review a recording of this webinar and past webinars using the portal where you signed up for the event. So we'll also be emailing out a reminder around where to find some of that stuff afterwards. And so far, we've received composite ratings of 4.5 or so out of 5 on each webinar so far. So no pressure today on our group to go even higher, and we'll show you how you can rate us kind of like Yelp as part of the webinar as well. So we'll recap a bit, and then we'll also dive into the renewable energy journeys for HP, Owens Corning, and IKEA. And really, I think the goal of our collective panel is these are folks that have been there before. We know that many of you on the line are maybe been down the road a bit or shared similar journeys or even just getting started. So I think our goal is really to help the audience get a firsthand feel for how to navigate and capitalize on the opportunities really presented to commercial and industrial end users like these three companies in the space of renewables, because it's quickly evolving, as we've talked about, and there's new and burgeoning opportunities that exist globally around how to more directly participate, and it's not just the utility space anymore. And then lastly, as mentioned, we'll have plenty of time for an interactive panel discussion using questions and feedback from polls submitted by you, the audience. So before we dive in, I just want to cover off quickly on just a few of the webinar logistics. So you'll see in front of you the webinar platform that you have. If the screen looks a little bit tiny, focus your eyes on the bottom right. You can see where you can adjust that to go full screen within your browser. So that may help you see it. And then if you can't hear us, then the volume's right next to it. So fairly self-explanatory, but just in case you couldn't find those. And then along the top, you'll see some various information. The webinar slides will continue to go on top of your portal. But there will also be an opportunity to ask a question. So again, the enrichment part of this is this panel discussion, which we've shared or holding a good bit of time for. So make sure to interject your questions throughout. If you hear something interesting or something you want to get more insight on, pop a question over, and I'll be moderating a good bit of that at the end. You'll also see some poll questions throughout that kind of pop up. We've got 2 of those throughout the platform. What you'll be able to do is answer those, and then there's a little closed window at the top right of your browser that you'll see, or not at your browser, but at the webinar window. You close that off, and you'll go back to seeing the slides. And then we've got some attachments of things to view some additional information, as well as mentioned the opportunity to rate us as part of that on a 5-star type of platform. And then ultimately as well, even share this with other folks that you see fit. So just a little bit on the logistics today. So with that, why don't we just quickly cover off on some of the recap. As mentioned, this is session 3 as part of our Renewable Revolution series. In the first session, The Revolution is Here, we really covered off on, I'll call it the state of play in the global renewable energy market. So for those of you that missed it, you'll be able to hit a recording and you'll see. You'll recall, for many of you that attended, the fact that the grid is evolving, right? The access to C&I end users to more directly participate in renewables is growing and growing. So is price competitiveness. So if you look at traditional grid power pricing versus solar, wind, and other types of renewable solutions or fuel cells in different markets, it's quite price competitive and often in many markets can beat grid. So price, kind of to myth bust a bit of that, renewables are here because they're economic and they also drive further positive impact from an environmental standpoint. Some of that that's fueling it is regulation and incentives, as well as a lot of participation is based on NGOs, and I know some of our presenters today will be speaking to a bit of that. Second straight year of year-over-year triple-digit growth in renewables by C&I end users. We here at Schneider don't see that calming down at all. In fact, it'll continue to accelerate. So we're looking at almost double growth this year in terms of what we believe some of the commitments are going to be, especially in some of off-site large PPA type contracts, which we'll talk about, as well as multiple technology options exist. Procurement structures. So over on the right side of your screen there, kind of the level of complexity increasing to the right, there's just more and more options that are out there for you to take advantage as a C&I end user in different renewable solutions around the world. But in order to get there, and this panel and so I encourage you to ask them these questions, it's critical to establish internal buy-in as well as define a clear roadmap for renewables integration. And each of these 3 folks have been really successful in doing so for their organization. Session 2, we were joined by a group of truly leading solution providers in this space. And if you hadn't had a chance to check it out, some really keen insights were provided on how the market is evolving. There's a variety of different technologies that are powering the revolution, whether it's price reductions and efficiency improvements in wind turbines, really continue to drive down the average delivered cost of new wind installations, fueling growth, and again, driving some of that cost parity or even beating market. Fuel cell technologies and creating electricity out of magic that Bloom Energy does is rapidly evolving and provides a scalable, reliable kind of base load source of energy. So unlike some of the peaking structures of solar or wind, it's a base load type of technology. And if you just look at solar alone, it accounted for 32% of electricity generating capacity in the U.S., not slowing down. So a lot of that, if you look at new capacity installation, just more and more around renewables and, again, the access of end users to do so. So you're probably sitting there saying to yourself, hey, that's all great. I understand the market. I understand the solutions that are out there, but how do I get it done? And so today we're going to take a lot of that kind of past discussion and turn it into rolling up our sleeves and learning from an experienced group of folks who have done just that. They've rolled up their sleeves within their organization and gotten work done in this area. So with that, we're going to encourage some questions and excited to hear what this group has to share. So just before jumping into this, and again, to try and make this interactive as we have, I want to ask you one of two questions we'll be asking you throughout. And I'll be using some of the poll results from this to kind of kick off a bit of our panel session. But in which area of, I'll just call it renewable energy development, would you like to learn more about? Is it to market assessments? Is it so essentially saying where might opportunities exist around the world? Is it the solicitation process to get projects going? You know, how do I manage an RFP process or do vendor due diligence and things like that? Is it C, financial analyses and the varying approaches of how to do that? And you know, how do you weight the economics of these types of solutions and maybe even beyond? Or is it D, negotiation and contracting as it relates to that? So essentially going through and saying, how do I negotiate these complex multi-million-dollar type of deals that are presenting opportunity, and doing so to essentially you know, showcase what's most effective. So I encourage you to go ahead and keep submitting your votes. All right, Steve, I'm going to go ahead and call it quits. It looks like with 45% of our audience, financial analyses and approaches won. So panel members, be thinking about how you weighed some of those economics when we jump into that and go from there. So let's first hear from Chris over at HP. And as mentioned, Chris has a wide-ranging role and really managed a lot of the focus for the HP organization around how to advance not only that environmental brand and agenda, but really drive broader strategic initiatives when you think about it from that perspective. So with that, Chris, please take it away.
Thanks, John. Thank you very much. Yeah, so I thought, you know, given the time that we have today, what I would do is I would sort of organize, you know, my quick presentation on first discussing why, you know, renewables are relevant to our business here at Hewlett-Packard. I think that's important. It won't be a surprise for many of the listeners why that's the case. And then I think what's important is, to the extent that I can, I think it'd be helpful to also outline sort of the business scenario, how we built the internal business case for renewables procurement, because I know that's a kind of a key challenge to most of the practitioners, sustainability practitioners and energy managers in the audience is how do you build that business case? What are the challenges around doing that? And I could talk a little bit to, you know, how to build out kind of some best practices around building out a good, solid core group that could lead to success, that could position yourself for success internally within the organization. And then I'll just finally kind of touch on, you know, a deal that we did with Schneider and, you know, the relevance and sort of impact of a deal of that size, what it can do for your organization. So with that, why don't we kick on over to the first slide. So why are renewables relevant to Hewlett-Packard? I mean, it's no surprise for the folks on the phone that obviously there is a data explosion that's occurring that we are right in the middle of. It's really about the cloud. While Hewlett-Packard focuses on data solutions, server storage, networking, software, most of our customers are enterprise-based customers. A lot of their customers are in turn consumers. What's really driving a huge explosion within the cloud right now is the video aspect. If you look at the pie chart, the video aspect of consumer use on the internet. The cloud currently consumes as much energy as the countries of Germany and Japan that they produce on an annual basis, which is a shocking number. If you look at the total IT infrastructure from a life cycle analysis standpoint, IT currently consumes about 10% of the global energy resources. So that is only going to grow. It's anticipated that within 10 years, the amount of data that exists today will increase by 1 billion times. So we are truly in the middle of a massive acceleration phase. The online population is expected to be approximately 80% of the world's adults by 2020. So these numbers are staggering and only growing. The number of folks that you could imagine looking at cat videos on YouTube is only going to proliferate. So I use that merely as an example because obviously video transcoding and transmission is really driving a lot of the energy consumption of the cloud itself. So at HP, really what we do is we recognize that we need to focus on a holistic approach to energy. A lot of our R&D is focused on energy efficiency, sort of the within the four walls, as we like to say. So products like our Moonshot server line, which is the system on a chip server technology, the Apollo supercomputing technology we have, and now we're working on some innovative technologies to completely disrupt and revolutionize the way the computing is done. Those are kind of some of the three key technologies that we're working on now, and if folks want to hear more about those, you can certainly look those up, and it's easy to find those. But what this conversation today is about is really sort of outside the walls. How do we maximize our impact? How do we maximize our reputation? How do we improve our overall energy portfolio? And we've decided to focus on renewables, advocacy, and advancement of policy. So while today I'm going to talk a lot about kind of the tactical approach to a particular renewable deal we worked on, I would say that's one small piece of what we're trying to advance at HP, which is really driving additional green electrons into the ground. And as a lot of you folks know, governments are moving slow. A lot of the utilities are moving even slower. You have to navigate this space yourself. It's not easy to do. Things don't move quickly. But in addition to making these deals happen, I think it's important that we create coalitions to work together to advance the ease of procurement of the green electrons that we're all so wanting to seek. Okay, Steve. Head to the next slide. Thanks. So I could touch on, to the extent possible, kind of the definition of the business scenario. I think this is really where the rubber meets the road. This is how the conversation began internally with me and some of my peers across the various different organizations within HP. When we knew we had to make a shift, what were the factors that we needed to consider? I mean, so in general, obviously meeting the challenges to meet our energy demands cost effectively is first and foremost for our energy managers, our operational managers and facilities folks. They are looking at that through a very focused lens. That is something that is first and foremost. Obviously, the expectations of lower OpEx costs are always coupled with any big decisions at a mature corporation of our size. So that was something that we needed to consider. Most of the modeling that most of us are aware of, we've done some internally. Schneider assisted us with some as well. Long-term energy prices are expected to rise. So that's obviously kind of an external macroeconomic factor or force that weighs into this sort of decision. I would say what is becoming interesting and more important is the fact that we're seeing increased customer awareness and even investor awareness around the renewable energy story. We disclose our carbon footprint in CDP, the global carbon platform, and we've got a number, dozens of customers are reaching out directly and interested in knowing how we power our own data. So there's a business opportunity there as well. HP has a very aggressive greenhouse gas reduction target from an operational perspective, which was 20% of our operational footprints, scopes 1 and 2 by 2020. And as John had mentioned earlier, the NGO factor, costs of externalities are really growing. We don't see them reducing. The license to operate is a big business. The cost of brown power from a reputational standpoint is continuing to grow. As many of the folks on the line know, the Greenpeace reports that come out highlight some of the Amazons and some of the other companies in the world that have challenges. We've been called out as having challenges as well. I'm not singling them out in any way. But the point is the NGO scrutiny is increasing, and while NGOs don't drive our business decisions, it's certainly something that we view as really a way to gauge where public sentiment is heading, where customer sentiment, more importantly, is heading. In this particular case, we worked closely with Schneider on a deal in Texas. We had sort of the perfect storm which occurred. There was the combination of a good, strong supply of wind in Texas. There's obviously great wind resources, and there was an extension that many of you are aware of, the federal tax credits, which expired in 2014. There was an extension. Some of those developers were grandfathered in. And in addition to that, we had a major concentration of demand. We had a large load in Texas. All of HP's global internal IT operations are powered out of data centers in Texas. In addition to that, we also have some enterprise services related data centers that power the data of some of our customers there as well. So it was really a hot spot for us. And as I said, kind of the perfect storm. It came together in a way where the economics and the load and the timing really came to a perfect head. Okay, Steve? So just to sort of indicate, well, first before I touch on that, I'll talk a little bit about kind of building kind of the core group. So I talked a little bit about the business case. So I think what was important is there's no way we would have been successful in a deal that took almost a year. I would actually, if you talk to me, it would be even longer, more like 3 to 4 years. We began to sort of educating our operations team on the importance of renewables, 3 years before the deal was even struck. But we couldn't have done it without a really strong core team that represented multiple aspects of the value chain internally. We had key folks from the enterprise services side of the business. Those are the folks that are interested in powering our customers' data more efficiently. We had folks engaged within HPIT because of our concentration of data centers in Texas that I mentioned that powers HP's own internal global IT operations. Obviously, the energy managers and facilities managers were a key component of that. The sustainability team, which, for lack of sort of a better description, that's sort of what I represented, was corporate affairs and sustainability. Some of my counterparts are within the government relations team, so they were also engaged and involved. That was really sort of the core team, as well as procurement, obviously, last but certainly not least. The folks that are engaged in actually executing contracts are critical to understanding and driving the success of some of these deals. So that was really the core team that we had originally set up. I think, without any one of those pieces, it would not have been possible. It was truly an amazing team effort. It was not easy. We all had to sort of internally advocate up our own sort of reporting chain. One of the things we did too, which I think was interesting, that helped make our internal journey more successful, is along the way what we did is we identified what we called key project endorsers. These were sort of vice president and above level across the organization that we included in the fold as we were working toward our business case, defining the business case, doing the internal analyses that were necessary. We brought these folks along as endorsers. So when it came time to actually get to where the rubber met the road and the execution of the actual contract, we already had sort of a critical mass. I think that was super helpful. Also, obviously, I'd be remiss not to mention the fact that there was a large extended team involved as well. We involved folks in the extended procurement team, legal, and accounting. I think probably one learning is perhaps we could have involved a couple of those folks earlier, so that would be kind of one of the lessons I think that we learned. If any of the folks could learn anything from some sort of our process, our journey, would be to engage those folks as early on in the process as possible. This last slide is just merely to sort of highlight what the impact, in our case, it was a 112 megawatt power purchase agreement. It was a pure wind deal, 100% wind deal in Texas with SunEdison. Schneider helped us with a great deal of the analysis. They became sort of an extended member of the core team. I would say, they were heavily involved in a lot of the projections, the NPV calculations, et cetera, and really were invaluable in the process. This is just really to sort of illustrate, On the front end of this journey, we had no idea what sort of impact we might potentially be able to have. But we are a massive global IT operation, and this slide here simply depicts what this one PPA deal did for us from a renewable energy perspective to our overall energy portfolio. This is our global energy portfolio. One of the engineers in our enterprise services group did this calculation for us, David Fuqua, and it really just sort of depicts the magnitude of something that a deal of this size could do to your operation. HP moved from about 18% of our overall global portfolio of clean energy up to almost a third just based on this one deal. So a lot of us that hear things about aspirational 100% renewable targets and things like that, I think the thing that struck me the most was, you know what? I mean, a couple of deals of this size could really advance where your organization is from a renewable energy portfolio perspective. So I think that's what I had, and I'd be happy to take questions on the back end, Steve, when the other folks on the panel have the opportunity to present their information as well.
Chris, that's great. Appreciate that. And so a question for you, Chris, maybe just a quick highlight, but I also want to take this to remind the audience, feel free to submit your questions. We'll absolutely get to those. But just quickly, a pretty impressive feat, pretty large-scale deal. I think it was on the order of 112 megawatts or something like that. Really sizable type of transaction. And you talked about the gathering of that team. How long did that take? So when you think about, hey, we've got approval to move forward on this initiative all the way to kind of signing the agreement, how many months was that roughly?
Yeah, I mean, that's a great question. I mean, I would say what we found was, interestingly, because we're such a massive organization, we're over 300,000 employees, kind of pre-split. We're going to split into two companies November 1, but over 300,000 employees pre-split. There were a number of folks internally that were starting to consider this kind of issue of renewable energy. One of our key IT operations managers was thinking about it. We were trying to drive it from a sustainability perspective. The operations team had known about it, but thought, we're not in a position where we could really invest at a premium. We weren't at cost parity yet. So there were sort of these different pathways that were occurring internally. And it wasn't really until we really connected the dots that the core team came together. And then what we did was, I would say, it was probably at least 6 months, 6 to 9 months. Let's say 9. I mean, really, if I want to consider the formation of the core team, working all the way up, sort of our reporting chain, to final execution was about 9 months.
Okay, great. Yeah, it's interesting to see as we've kind of implored with the group as part of this, that internal buy-in's key, and then I think the execution on the actual opportunity isn't all that lengthy, but yeah, but that occurs because of the good alignment of the group in the beginning. So, well, thank you for that, Chris.
Yeah, and absolutely, that's a great point. I would say that alignment's really critical. When you get to the execution process where you finally present it to either your C-suite or your final kind of top-level executive for signature, I mean, all your ducks need to be in a row at that point. If you have questions about accounting, treatment, or anything at that point, that's something that could derail you. So the formation of that team is really critical.
Absolutely. Well, Amy, interested to hear from your perspective, and as global energy sourcing leader, that's a tall task, and thinking about that with Owens Corning. So with that, take it away. Share with us a little bit about your journey.
Sure. So, well, thanks for asking me to be a part of it. Like John said, I manage all of our electricity and natural gas procurement on the global energy sourcing team. And that also includes any renewable power procurement that we do as well. And so I wanted to share just a little bit about how we think about renewable energy at Owens Corning. For any of you who are familiar with the company, we have some pretty strategic and hungry 2020 sustainability goals that I'd encourage you to look a little more closely at. They're available on our website, but without the time to go through that today, what I really wanted to talk about is how we're progressing renewables to really drive some of those. So we're really trying to do this while increasing shareholder value. And, you heard HP talk about being at grid parity, and that sort of really aligns with what we're trying to do as well, and that we're not being green for the sake of being green. So we're not writing checks for renewable energy credits, that we really want to figure out different ways to collaborate with our partners like Schneider or the major suppliers in this industry to come up with new and creative ways. Maybe there's new products, new structures that can really drive, better than grid parity projects. So we're really increasing shareholder value as we do these projects and drive our 2020 goals. Additionally, I sort of mentioned this, but leveraging those energy experts to make us aware of options. So time and time again, it's not my main area of responsibility to search the renewable energy incentives, but that's a lot of what makes these possible. So I really encourage you to form the relationships with your suppliers, whether they're just your retail energy suppliers or if you have a specific relationship with renewable providers. Make sure that they're aware of what you're trying to do, because they're doing this day in and day out and can let you know the minute a new incentive is passed by legislature that can make a project that hasn't been financially feasible much more economical. And then really, we're also trying to incorporate evaluation of more than just the financials in the project. And I'll talk about that a little more later, but how some things can really push a project over the finish line because they have value other than just dollars and cents. So this is, for us, has really resulted in a diversification of solutions. We have a couple of on-site solar PPAs that I'll talk about, and also some clean tech fuel installations. Next slide. So we currently have 4 major renewable projects that are complete, and in the next 3 or 4 weeks and next couple of months, you'll be hearing about a few more that unfortunately I can't talk about today. I personally, on this list that you see here, have been involved in the last 3 of those. From, a sourcing perspective, we really lead not only the integration with the suppliers and contract negotiation, but building the business case and getting all of the right people on the team to make sure that we're answering the questions for our C-suite executives as we look at these deals. And so I wanted to share just a few key insights that we've had along the way. The first, and my, probably, encouragement to you all as you are just starting off on this is that your first project really paves the way for the rest of these, and it gets easier. So the first project that I was involved in was the fuel cell in Compton, California, at our facility there. And it was completely new. We really hadn't been doing a lot to focus on renewables. So just getting people's mindset around what we were trying to do was a big hurdle. And once people were talking about it, the next couple of projects were a lot easier to get started, to get people on board to understand why we were spending the time on what we were doing. Obviously, it's an important topic for our company as it relates to our sustainability goals, but our accounting teams and our legal teams aren't directly working with the sustainability organization on a day-to-day basis, so it was a good reminder about why we were doing it. HP also mentioned this, that education of your senior executives and your respective teams is really key. He also mentioned specifically accounting, and I will say that has been our biggest hurdle with all of these projects. As a public company, we have some pretty strict guidelines around derivative accounting and hedge accounting that are really important for us. So not only having legal on board and having them understand how PPAs work, but really having our accounting team all the way up to our corporate controller really engaged and included and informed on how the accounting for these projects work made our discussions with senior executives go a lot smoother, because inevitably that was one of the very first questions that we were asked. Sort of on that same note, really rely on your suppliers to break down some of these roadblocks. When we were evaluating some of these deals, accounting started to push back with some questions that I'm not an accountant, I can't necessarily answer, but our suppliers could, because they had already had those discussions with other customers. They'd already worked through different solutions. And instead of trying to reinvent the wheel and do research on our own, we could really rely on those companies, as well as Schneider supported us on many projects as well, to really leverage their expertise. I alluded to this on the previous slide, but really figuring out a method to evaluate the non-financials of the projects. For example, specifically to our fuel cell installation in Compton, there was a big impact of that project that came from increased reliability at that facility. And obviously, it has some financial benefit to it. If we have better reliability, we have less downtime at the plant. However, it also had a safety implication. Jones Corning has a huge stance on safety and making sure that our employees are returning home in the condition that they started work that day. So we were able to actually, didn't necessarily push it over the finish line, but it was just one other benefit that we could present to senior executives on why we should look at doing this project. So I'd really encourage you to think about those types of items that can have benefits that aren't necessarily financial. Another one that we look at quite significantly is the PR that we'll get from any particular project, and we evaluate that on a local, national, and global scale as well. The next bullet point that I have in here, I've sort of already talked through a little bit in regards to the must-have requirements. So, grid parity is one of them for us, and I would imagine a lot of other companies. Hedge accounting is another must for us. Should just really encourage you as you get your working team together and get everyone on the same page at the beginning around what you have to have, whether it's credit requirements, whether it's a certain price threshold, whether it's an escalator in the contract. Having all of those identified in advance with all of your respective teams really helps it go much smoother, so you aren't surprised when you go in for a final approval somewhere. And then lastly, try to think about ways that you can really evaluate these opportunities as more than just sustainability projects. So an example that I'll give is just thinking about the long-term nature that these projects typically have. You see a lot of PPAs that have 15, 20, 25-year terms to them. And sometimes that's hard to swallow if you're talking to people who aren't incredibly familiar with the energy markets. But if we think about where we expect power prices to go, you can really think about these as maybe a risk mitigation strategy in addition to a sustainability advantage for your company as well. So those are my key insights as I've been working on these. And if you go to the next slide, another learning opportunity that I wanted to invite you all to, and John can connect you with me directly if you're interested in attending. But Owens Corning is going to be hosting a learning forum when we do the ribbon cutting for our carport solar array at our headquarters in Toledo. That's going to be followed by a session with key industry experts. Mr. Hoekstra is going to be on our panel there as well, talking really about this same topic. He's participating as well as a few key suppliers that we've been working on these deals with. So it's a great opportunity to learn more about this topic and how you can really make this work for your company. There will be a panel on that topic as well as one on energy efficiency, because that's another big piece of the puzzle as we look at our sustainability goals for 2020. So if you have any interest in attending that or getting more information, John can definitely put you in touch with me, and I can get you what you need. So, John, I think that concludes it for me.
Great. Thanks, Amy. And, yeah, absolutely encourage folks to attend this event and learn more about it. Really, really great things that are going on at Owens Corning. And so thanks for that, Amy, and really appreciate those insights. It's always intriguing to hear that kind of from how to navigate the process and at the end, from a sourcing perspective, execute on those. So great stuff. Mark, I'm going to go ahead and flip it over to you. I know that, you probably get involved, or I know you get involved in a lot of these similar types of things when you think about design and construction and thinking about it from a facilities perspective and more broadly. So intrigued on some of your insights as well. So please take it away.
Thank you. Excuse me. If you can just flip to the next slide, Steve. One of the unique things about IKEA is really sustainability is core to everything we do. It's one of the cornerstones of our business plan, has been for many years, and is always part of our ongoing business plans. The benefit of that is really it's been a top-down support for all of our renewable energy as well as our energy efficiency and sustainability efforts. IKEA sees this as a business opportunity as well as being an essential part of being a good company. So, there are two aspects to that. In the past, the question has come up, especially as it relates to our renewable energy efforts. The component of return on investment is very important to us. We need to make a good business decision for each project that we do. Each one stands alone. And that's not just for renewables. This is for every aspect of our supply chain. IKEA produces all of its own products, either directly or through vendors. We control those vendors. We have the same mandates to them for sustainability as we have for ourselves. And it goes all the way back to controlling the forest and sustainable foresting. So it does really work all the way through the supply chain. My focus, as Steve and John have mentioned, I've kind of changed roles, but my main focus was on renewable energy, energy efficiency, as well as energy procurement. So a lot of the early work that I had done was with Schneider Electric, and having them work with us as a partner for procurement within the U.S., as well as an ongoing relationship with them for handling our renewable energy credits from our solar arrays. Next slide, please. So renewable goals and progress. When we embarked on a very strategic focus on renewables and energy efficiency about 9 years ago now, really each country was tasked with coming up with their own strategy to meet some pretty ambitious goals that the global company had put forth. One of those being to source 100% of our building consumption energy through the form of renewables. A significant part of that has come from the installation of solar PVs. And as John mentioned, we're very proud that we've been able to hit 90% of our buildings within the U.S. The only challenges that we had to not actually hitting 100% is that a few of the buildings, based upon their structural capacity or size, actually would not permit a system on the roof. That was the only real barrier that we had to getting those installed. Additionally, we continue on every new store that we open to evaluate. We continue to install solar arrays on every roof for new stores. We have a fairly aggressive plan over the next 10 years as far as expansion within the U.S. So solar will continue to be a significant part of that for on-site generation. The limitation, despite having, on average, 5.5 acres under roof for a typical store, we are not able to reach that 100% offset on that facility. So over the last few years, in conjunction with our global group, they decided to allocate 1.5 billion euros, approximately $2 billion through 2015, to support the growth of our renewable energy programs, not only in the U.S. but globally. That actually opened up two very significant opportunities for us to move into the wind market. We commissioned one wind farm in Illinois, which is just under 100 megawatts. Earlier this year, we have a second site, which is nearing completion in Texas, which puts us at 263 megawatts of wind generation. Both of those wind sites, in addition to all of our solar PV assets, are all internally owned and operated. IKEA, very early on, when I was given this challenge, challenged me with figuring out a way to make the financials work without going the PPA or a leasing route. So lo and behold, we did figure out a way, which actually happened to be very successful. The benefit of that is, we are able to take advantage directly of incentives, whether it be on the tax side or through local programs, as well as being able to capture and retire all of our renewable energy credits. Just recently, within the last few months, we did commission one fuel cell project in California. So we are adding to our suite of renewables. We hope to continue with that. That's another opportunity for us to get some additional on-site generation. But the wind certainly has given us the opportunity to get well over 100% of our renewables within the U.S. So we have met that goal just recently with the addition of our wind assets. Next. So as far as the corporate and economic drivers, I've gotten a lot of questions over the years. How has IKEA, been able to move forward with this? A lot of companies struggle with not only internal support, but once you get the support, can you actually get the support for the financing aspect of it? A lot of that, as I mentioned before, has been a very strong top-down support within the organization. Starting at our prior CEO to our current CEO globally, and that goes down to a country level. So there's been very strong support. The other benefit is IKEA continues to be a privately held company. The benefit to that is we do have the ability to invest capital into different venues without necessarily having to be mindful of shares and returns. So additionally, IKEA takes a long-term versus a short-term investment strategy. We own the majority of our sites as well as our stores. So, when we build a store and come into a new market or even existing markets, we expect to be there into the foreseeable future. And with that, looking at a simple payback of 5 years or 6 years, really in the scheme of things for us is not detrimental to getting support for a project going forward. So it's given us a little bit more latitude than maybe some other people or organizations have the ability to capitalize on. Obviously, it strengthens the IKEA brand. This is actually something that we found out very early on, sustainability, because it's really, part of the organization and always has been, was more of an expectation from our customers. And despite all of the efforts that we put in very early on, we were very reluctant to speak about it. Once we embarked on this renewable energy program, I think the support internally, as well as realizing that we need to, inform our customers and the general public and our peers in the corporate world that, we are doing some really great things, making strides, and it is possible. It might take a different view of things. It might take some, varying amount of times given your organization, but it is possible. There are solutions. The pricing for renewable energy systems has dropped dramatically. Just giving you a quick comparison, when we first started our installing solar in the U.S. back in 2007, we were upwards of $8 a watt, which is about 4 times what you'd pay for a comparable system today. So, the incentives definitely helped make the financial returns work. But without the incentives today that were as robust as they were before, the economic viability, quite honestly, has not changed all that much. So the incentives have worked the way they were intended to. As I mentioned before, owning our systems allows us to capture all of our RECs. We don't have to go out onto the open market and purchase those. We retire them internally. And Schneider's been a partner with us helping to manage that. Part of owning and operating your own assets is we've really had to figure out with our facilities group the best way to maintain this, and part of that was reaching outward to external partners to help us manage that process. And that's really all I've got.
Great, thanks, Mark. Really, really interesting perspective. And why don't we go ahead and roll to a poll question here for everybody. We're just going to leave this up for a few moments to just sort of collect some votes around this question, around which aspect of renewable energy to learn more about. But we'll do that. We'll go ahead and jump into some of our Q&A. I want to be careful with time here as we have about just a few minutes left here on the discussion. But Mark, you had highlighted that IKEA made the investment in 263 megawatts of renewable energy through wind. That's quite a sizable investment, similar to kind of where HP was on some of that. Just curious, how did you size that view? What as we saw, Chris shared what the impact of that wind project had on their portfolio. Curious about that a little bit from an IKEA perspective.
That's a great question. A lot of that has to do, as I mentioned, we've got some fairly aggressive expansion goals over the next 10 years and, foreseeably in the future after that. What we didn't want to do is be short-sighted and, always chasing that 100% goal. So a partial driver to the size of these wind farms was actually to capture what we project our expansion to be. So at the current moment, we're well in excess of offsetting our current consumption, and we hope that in the future we'll be able to maintain that offset with our expansion of new stores and distribution centers in the U.S.
Okay, yeah, very, very interesting to see how, kind of like Wayne Gretzky saying, I just try to skate to where the puck's going to be, right? So.
That's right.
Well, we've got some great questions coming in. Only have a few minutes to hit those, but we'll be sure to some really good ones coming in. So I'm going to just dive right into it. So with that, and this is really a question. Amy, I'll kind of start with you, and then would love just a quick commentary from Chris and Mark as well. And it relates back to some of the financial analysis and some of that. I think Chris touched on some of that already around how his group did it, but this is around how did you all view and evaluate some of the supplier performance risks that exist here, and specifically as it relates to a developer's ability to fund, construct, and then operate a project over the term of a renewable energy agreement. Pretty insightful question coming from the audience there. So Amy, curious on your perspective, and then if each of you could touch on it.
Sure. So I think the first thing I'd mention is I don't know that any of us specifically brought this up, but for Owens Corning at least, one of the key members of our team were employees within our treasury organization, and our treasurer was ultimately a approver on all of the projects that we've done, really to evaluate at first step the creditworthiness of all of these counterparties, and that really led into discussions on performance assurance language that was embedded in our contract, as that differed depending on whether it was a public or private company, and the length of the agreement, and their presence in the industry. From a evaluation standpoint of being able to get the projects done and different things like that, there were a couple of things that we looked at. One of them was just industry expertise, length in the industry. We really relied on Schneider for some projects to help us identify the market players to even include in our RFPs, and really give us some good insight into who could best be partnered with us on these projects. And then also we did many conference calls with references even just to talk about how their projects went, how did the financing progress go once contracts were signed and they went out to their financing entities, how did the construction go. And then lastly, I would say we have one key company that I can mention is a retail supplier of ours. It's Constellation, and we have a couple of solar arrays with them currently. So there's something to say, too, for the extended relationships that you have with the companies that you work with on brown power procurement. It's a different organization or different group of people within their company, but we have a lot of, history with Constellation, and that really, weighed into our projects that we've done with them in Toledo and in New York as well.
Great, thanks. Chris or Mark, any comments on that?
Yeah, I would just echo a little bit what Owens Corning had to say. To a certain extent, Schneider, as part of our extended team, helped us through some of that. We also included Treasury and legal to a large extent on our extended team, and did a very thorough credit risk evaluation. We also developed, as part of the RFP process, sort of an internal scorecard and really evaluated various factors that we thought were important to the selection criteria. And obviously credit risk is one of those, and then scored companies accordingly sort of during that process. In the case of the developer that we went with, Sun Edison, there was already some work underway with a particular project, which removed some of the barriers and some of the risk associated with that, and they had some existing developments in the area as well. So obviously track record, kind of size, we evaluated all those factors, and then worked closely with Schneider and our legal team to evaluate the other factors, and did a pretty extensive due diligence phase.
Excellent. So maybe, and this is probably all that we have time for, is one last quick question. Was just kind of around the sense of the using renewable energy credits, and sort of, Mark, you kind of commented on how IKEA views that, retiring those. Maybe a last question for you is just kind of consideration. How do you view the REC component? And then this particular question was that there's a REC arbitrage out there where you essentially can sell compliance RECs and replace those with voluntary RECs is probably what this is going to. Just kind of any sense of, and you don't have to talk to that specifically, but just how IKEA thinks about the renewable attribute piece. And sorry to put you on the clock, but we got about 1 minute probably for that.
Yeah, it was a little bit tricky for us. I've got to be honest. There are some markets where the compliance market, played into how we structure the financial funding of the project. But there are many other locations where there's no REC market. It's voluntary. In those cases, we've just chosen to keep those internally. That's really the reason we've gone down the path that we have of ownership, because we know that we can retire those and count those internally as far as our carbon offset.
Yeah, it makes a lot of sense, and I know that IKEA's had a really strong investment there in achieving those goals. So, well, with that, I really want to take a sincere opportunity to thank all of you for joining us today. I think, Chris, as you were sharing earlier, time flies like arrows and fruit flies like bananas, and boy, did our time fly through this hour. So thanks again. I'll remind the audience, please rate us up there, kind of like the Yelp, if you will. And there are a number of questions that were still extended out there that the Schneider team will take a look at and get back to you on in terms of some of that feedback. So thanks again. Be on the lookout. We're going to have one more session in this series here coming up within the next month or so, kind of talking about what's on the horizon, what's next when we think about not only the successes that folks like IKEA, Hewlett-Packard, and Owens Corning have enjoyed to date, but what's kind of on the horizon. So thanks again to our panel, and I wish everyone a good day.
Thank you.
Thank you all.